Last December, in just 4 days, Elon Musk's reported net worth jumped by roughly $100 billion, rising from around $600 billion to about $700 billion. That's more than the annual GDP of Belgium. Yes, really. Overnight, headlines started floating a new label, the world's first 700 billionaire. But here's the twist. What if most of that fortune isn't money at all? Because there's a mechanism, one that can turn belief into billions and just as quickly erase it. Stay with me. By the end, you'll see how valuations, hype, and corporate governance can create paper wealth at a generational scale, and why it's more fragile than it looks. We usually imagine wealth in simple terms: cash in the bank, products sold, profits earned. But Musk's wealth doesn't work like that. It's mostly tied up in assets that move on headlines. Privately held SpaceX, publicly traded Tesla, and his AI startup, XAI, plus a web of stock options and compensation deals. And this is the key idea. Here's the mechanism. When investors buy a future story, the price jumps to daily. And when the price jumps, paper wealth explodes because it's calculated off valuations, not cash. Plain and simple. Now look at the sequence that pushed his number higher. Reports said SpaceX was planning a secondary share sale, valuing the company at about $800 billion, roughly double a reported August valuation, and Musk's stake, around 42%, implied a massive paper gain. Days later, Tesla shares moved on his promise of millions of Teslas operating fully autonomously, nudging his fortune higher again. Then came XAI, reportedly raising $20 billion at a $250 billion valuation. And on top of that, a Delaware court decision affecting a compensation plan valued around $139 billion. So this video isn't really about one man's wealth. It's about how modern fortunes are built on stories, on pricing, and on legal and financial structures that convert a narrative into numbers. And one more question hangs over everything. If this is how wealth can be created, can it also make Musk the first trillionaire? It starts with SpaceX, the rocket and satellite company Musk founded in 2002. In August 2025, insiders reportedly valued SpaceX around $400 billion. By December, reports said SpaceX was authorizing a secondary share sale, priced around $421 per share, about 6 million shares, raising roughly $2.56 billion. That deal implied an $800 billion valuation, making SpaceX the most valuable private company on Earth. Now here's the paper moment. If Musk holds roughly 42%, that implied a paper gain around $168 billion, because SpaceX didn't suddenly double its revenue. The valuation is a bet on what SpaceX could become: Starlink scaling globally, Starship lowering launch costs, and space infrastructure turning into a platform. Investors aren't paying for what SpaceX is today. They're paying for what they believe Musk can make it tomorrow. And the story gets sharper. Reports also said SpaceX was considering a late 2026 IPO that could raise more than $25 billion and potentially push valuation even higher. If that happens, early employees and insiders look like geniuses. So the question becomes, is this valuation earned or borrowed from belief? Meanwhile, attention snapped to Tesla, and the word that moves markets faster than almost anything else: Robotaxi. Reports said Tesla launched an early driverless cab test in Austin, small fleet, limited routes, with safety monitoring. Some footage showed imperfect behavior, brief moments that looked not ready for prime time. Experts have warned that scaling from a dozen vehicles to millions is orders of magnitude harder, because the real world is chaos. Weather, construction, weird human behavior, edge cases. And yet, even a modest test can ignite a market reaction if the story is big enough. Musk's claim that Tesla could have millions of fully autonomous vehicles by 2026 helped lift belief. and Tesla shares moved on that belief. Now here's the tension. That happened while Tesla's core car business was under pressure. Reports said Q1 2025 sales dropped 13%, the biggest decline in nearly 3 years. So you have two Teslas on screen at once, the real one and the future one, and the market keeps pricing the future one. Now, watch the incentive structure, because with Tesla, the story doesn't just move the stock. It can also multiply Musk's upside through compensation packages tied to ambitious targets: vehicles, subscriptions, robots, market cap. When the stock rises, options can become worth staggering amounts, fast. Not because cash changed hands, but because the market repriced the story. Then it hit. XAI. Reports said that in January 2026, Musk's AI startup raised $20 billion in an upsized round, valuing XAI at $250 billion. The investor list reportedly included major names, capital that signals one thing: fear of missing the next platform. If that valuation holds, the implied paper impact on Musk's wealth is enormous. Because here's what's happening in plain language. In an AI boom, the market rewards positioning, sometimes before revenue arrives. Investors pay up early because the upside is so extreme, if the bet hits. And this is where the three stories connect. SpaceX sells a future of infrastructure. Tesla sells a future of autonomy. XAI sells a future of intelligence. Different products, same fuel. Belief priced into valuation. Let's pause and be fair. Critics argue some of these valuations are stretched, comparing parts of the AI wave to past bubbles. They point to Tesla's sales pressure, Robotaxi hurdles, and the risk that market cap-based pay packages reward over-promising. But there is another side. Starlink is real and growing, with global demand. Tesla has shipped millions of vehicles and has a data advantage. Some analysts believe that matters. And NVIDIA's AI chip profits show parts of this boom are backed by real sales. So yes, there's substance beneath the hype. The hard part is separating what's real from what's priced as inevitable. And that leads to the open loop that powers this entire story. If fortunes can explode on narratives, what happens when the narrative breaks? Here's the reveal. Musk's fortune is mostly paper. That $700 billion isn't cash in a vault. It's a calculation based on share prices and private valuations that can change fast and aren't always liquid. SpaceX's headline valuation came from a secondary sale. Tesla's move rides autonomy optimism, even during sales pressure. XAI's number reflects a market willing to pay for potential at scale. And layered on top, compensation structures that can swing wildly with stock performance. Now, the wild part is, this doesn't mean Musk can't turn some of it into real wealth. He has sold shares before to fund big moves, but most of this number exists as long as the market keeps believing the story. And if belief falters, if Robotaxi stall, if Starlink growth slows, if AI valuations cool, paper wealth can shrink as fast as it appeared. So who wins and who loses when wealth becomes a storytelling contest? Winners. Early insiders who can sell near peak valuations. Employees with equity during strong liquidity events. Investors who time exits well. And Musk, through increased control and upside when targets and stock performance align. Losers. Workers and industries disrupted if autonomy scales. Gig drivers and labor markets pressured by automation narratives. Consumers if subscriptions and software pricing become the new tolls. And index investors if concentration risk bites during a correction. And here's the deeper takeaway. Corporate governance becomes the battlefield. Because when legal rulings and board structures can swing fortunes by hundreds of billions, shareholder power stops being a technical detail. It becomes the story. Second-order effects ripple out. Markets get more fragile. cross exposures amplify shocks, and trust in valuation becomes a product all its own. Now the forward-looking question. Could Musk become the first trillionaire? If Starlink keeps expanding, if Tesla autonomy becomes reliable at scale, and if XAI turns valuation into durable revenue, it's possible. But the path is precarious. Narratives can inflate wealth fast and deflate it even faster. The next 24 months may decide whether this is sustainable dominance or a cautionary tale. So pick a side. Is Elon Musk on a real path to $1 trillion, or is this paper fortune a bubble waiting to burst? And what breaks first? Robotaxis, AI valuations, or investor belief? Drop your prediction in the comments. Until next time, stay curious.